Well, hi everyone, James here. Quite a weekend, really, what has been going on in the Middle East. And so put a lot of jitters into the markets, into the natural gas and oil markets, and also the currency markets, and some other markets like gold. So let's have a look, and let's start with the currency markets as usual. We're still short on the US dollar, and I continue to think that the dollar is going to move down. I'm going to switch this to a weekly chart on the dollar index here, and I've got this denoted as Dixie Moab. We've broken down below there. It's a very, very long-term support level. And after having cleared out that top there, we've now moved down to the bottom and cleared out the bottom. And we're down now below Dixie Moab. And the next technical target is all the way down here at 93 at this order block, just below the 78.6% Fibonacci level, which is also a support level. That's at about 94.8. And if that level breaks where I've got the question mark, it's also where the lower 200 period Bollinger Band is, then we could get all the way back down to the bottom at about 90. This is a long-term view on the dollar. And although we've been traveling sideways for quite a long time now, most of the sort of last 10 years really, moving across the page and ranging between about 110 and about 90, so in that 20-point range, I suppose. So that's where we are, and looking back on the day chart, you can see we're just trying to probe down a little bit today. We're at the daily 200 period Bollinger Band, so once again, we'll have to burst through there, but we are below support. In sympathy with that, we're long on the euro and we're long on the Aussie dollar. I keep on saying on the Aussie dollar that we may have to get further along into where this green arrow is. That's the 1st of July. It's actually on track so far. We may just need to get another little dip down to these moving averages. There's the 50, 200, 20. We're holding the 20 now, which is good in the short term. But any dips down to these trend lines, and there are two of them, and also where these moving averages are, the 50 and the 100, will be good opportunities to buy. So it may be that we have to wait another couple of weeks before we get into the launch point for this inverse head and shoulders pattern, or a squiggly bracket, upside down squiggly bracket, if you want to call it that. But looking okay so far, although we may have to wait for another week or two before we get to the arrow, and we may have to suffer another dip down to one of these trend lines. We're also long on the euro against the US dollar, our two tranches, both in profit. And once again, like the dollar, I'm going to switch this to the weekly chart. There's the big clear out like we saw on the dollar index, sweeping down below the support level in the case of the euro. And now we've broken above resistance level. The next technical target on this weekly chart is up to the 78.6% fib at about 1.1750, or the big 1.2 level where I've got this question mark, or even the top of this range back up at 1.23, 1.2320. I also have a short position on the euro Japanese yen, although we've now hedged that where the orange arrow is. There's the two shorts, there's our hedge, and that's moving up higher. We've broken up above this recent swing high, so at this point I'm going to draw a Fibonacci study in here from the top down to the bottom. And you can see the 61.8% fib, the golden number, is right just above us, so we're probing up towards that now. And there's another Fibonacci level all the way up here at 171, and that's the 78.6% fib. Either of those are still potential targets, and until something happens and we see a reversal, I'm not going to do anything. We're fully hedged on this one. We'll see how this plays out. At some point, I'll want to take profit on this long hedge and then add to the short side on the euro yen, looking for this to move down, and the target is actually 144. Let me zoom this one out to the weekly chart as well, and you can see this is simply a technical target based on that flagpole, bear flag, although it's starting to angle upwards now, and then the flagpole downwards equal to the length of the initial flagpole. So we'll just keep an eye on that one, see how we go, looking to exit that long hedge at some point, maybe right at the top of this blue line in the 61.8% fib, or a little bit higher, and then we'll look to exit that and add some shorts and ride this one down to 144. Now going across to the indices, not a lot to say here apart from the fact that we're still short on the Nasdaq and the S&P. Our German 30 position, we took profit on the shorts down there at the bottom. We have no position on this just yet. We've got short at the top there, out at that ledge, and it's bouncing up a bit today. So whether these will move up or down, I don't know. We're probably pretty close to a top, although we may see that these markets rally from here onwards. A lot of people think that war is very bad for the markets. Actually, the opposite is true. And there's quite a lot of war going on right now, and the markets generally like war. Defense stocks, energy stocks, gold, all sorts of other stocks get a bit of a wiggle on when there's war going on. So this week will be interesting. We had a bit of a weak close last week on the Nasdaq and the S&P, with Friday selling off a little bit. Today has recovered so far in pre-market. We still have a long position on Tesla, ARK-K, and Nvidia. And in pre-market, these are all moving up pretty strongly and pretty nicely in sympathy with the Nasdaq and the S&P. So all three of these names, Tesla, ARK-K, and Nvidia, are all in profit right now, and we're still short on the Nasdaq and the S&P, and potentially we'll have to hedge those. I don't mind those moving up because I've also got long positions on Ethereum, Bitcoin, and XRP. These are all moving up beautifully over the weekend and in pre-market. A big bounce on Friday on Bitcoin. The others will follow suit, the altcoins, Ethereum and XRP. But we bounced off the 50-period moving average on Friday. We didn't manage to get up through the 20, And on Saturday and Sunday, the same sort of thing. But today, Monday, we've broken up through the 20 with a big bullish impulse drive upwards. So we're still long on Bitcoin. Targets, I don't know. Maybe 140, 160. Some people are calling for 250. I think that's a bit optimistic. But somewhere up above us, I think somewhere into the mid 100s, maybe 140, 150, 160, something like that. There is a Fibonacci extension at 163, and that's a good target to aim for. Ethereum and XRP holding up beautifully as well, and these will move up in sympathy with Bitcoin and maybe even outstrip Bitcoin. Ethereum has already done that recently. We had a massive rally in Ethereum last month in May. We're moving sideways across the page now, but it looks like a big bullish move, a bull flag, rectangle moving across the page. And the next move should be up, and it should be equivalent to the size of this flagpole, which extends from roughly 1,700 to 2,700. So $1,000, so we could get $1,000 on top of where we are right now. We're trading at 2,628, so we could get to 3,628 in the next move. I've got nothing on silver. We got long on silver right down here where this green arrow is at about 32. We got out up here at the top around 36, so we're flat on that one now. That could carry on moving up. I don't know. We'll have to wait and see. I'm pretty optimistic about silver, but I think we could get a pullback. Notice how far we are away from the 20-period moving average, and we need to get a little bit back closer to that, and probably even the 50. So a bit of a dip down in silver, and in sympathy with that, gold might move down too. We added another short tranche on gold on Friday, or was it Thursday? I think it was Friday, and we're short from there, and from there, and from there. I'm allowing for a move up through the top, maybe even a fractionally new high, and then a move down. I continue to target $3,000 on gold right down here at this next trend line and the Fibonacci extension level. But it is possible, of course, that we could get even further down to about 2.7 or 2.8 down into these big order blocks, the previous all-time high and the big breakout level. So the only metal trades that I have on now are short on gold. We took profit on silver, and we got stopped out at break-even on copper. Let's go across to energies, and very quickly, URA and UEC moving up massively again in pre-market. We're right up at $38 now on URA and $6.55 on UEC. We have long positions on both of these, fairly substantial. On natural gas, as you might know, I took profit late last week down at the bottom here at the channel line or triangle or trend line at the top of that. A pretty significant trend line at this point. We bounced off there on Friday, immediately formed this reversal lozenge, or I suppose expanding pattern, megaphone, but with the sides coming into to the right-hand side of the diagram, converts it into a lozenge or a diamond. A diamond or a lozenge or a megaphone pattern, they're all reversal patterns, and after having moved down, topping the trend line over there, we formed the pattern and bounced up, gapping up over the weekend and moving up slightly higher. We did move down after the gap up, but not too far, just to the 20 and the 100 period moving averages over here at this Fibonacci level and the market structure break. I must say this all looks pretty bullish. I don't have any positions on this just yet. I'm looking for a move back closer to $4 and maybe even significantly higher to sell into these upper levels. It could be that we're now trading between $5 and $3 for the foreseeable future, and not $4 and $3, so we have to allow for larger rallies, and I don't know where we're going from here. We're diddling in the middle right now, diddling right in the middle of the range. I'm assuming the range is roughly between $3 and $4, and we're trading right in the middle at about $3.60 something. So not great opportunities to trade right now. I wouldn't mind taking another long down near these trend lines, maybe into that order block, and the lower trend line coming up from underneath, the red one. It's a very short, shallow trend line, but nevertheless it's there. So any dips down into this sort of zone, or even $3 would be great, maybe even below $3. I did put up a pretty important point here on Friday, saying that this pattern here, this is the 4-hour chart on Black Bull, showing the Henry Hub price. Let's go to the day chart rather, and I want to illustrate this pattern to you. It looks a little bit like a head and shoulders pattern, and if it is, and I think you should know by now that I don't place a lot of emphasis on head and shoulders patterns, they're not my favorite. But if this does turn out to be that, this right-hand shoulder is a bit weak, but if it does turn out to be that, the target is much, much lower than $3. We could get all the way down into sort of 260, 250, 240, somewhere down here. That's not my best case scenario though, because I think that natural gas has probably moved into a higher range between $3 and $4, maybe even $3 and $5. Right, $4.70 is right at the top here, so that may be a top, maybe we can get a little higher, and then $3 might be the bottom, but we may even have to get a little bit lower. So tricky times, and of course there's all sorts of shenanigans going on, not only in Russia and Ukraine, but also in the Middle East. And I believe that oil fields and, apart from nuclear facilities, oil and natural gas targets are also on the cards, may even have struck some already. So could we see natural gas surging higher because of all of that? Or are we just going to see a technical correction down to $3 and a bounce back up to $4? Or do we have to probe even lower than that? I really don't know. There's no rush to get into the next trade. We made a good profit on this contract so far, so I'm not going to rush into the next position, and we'll see how we go. But for now, it all looks quite bullish. I wouldn't be buying now, but I certainly wouldn't be selling either. So keep your eyes peeled to X, Twitter, and make sure you stay abreast with what's going on in this channel. And if you want to get the most recent updates, why not consider joining the channel? It's $1 a month. There's a button below, and you can join for $1 or simply subscribe. But even better, join my private group. There are links below in the description, and you can get hold of every single trade I take, all the adjustments, all the exits, entries, every single position logged play by play for your benefit. So go and check that out. Right, now on WTI oil, you'll probably also know if you've been following me that we're still short on WTI. We took a new position right at the top here, at the channel top. And with all things, with oil and war, particularly in the Middle East, it's always a jittery old period. But you've seen that oil has been selling off for the last 2 or 3 years, despite what's been going on in the Middle East and despite what's been going on in Ukraine and Russia. And we've been constantly selling into these rallies, particularly the top of this channel. Let me illustrate this to you. Every time we've reached the top of the channel, we've sold, and we did so on this occasion too. I did miss actually precisely the top of the channel because that happened overnight in the middle of the night whilst I was not at my computer. But we did manage to get in a little bit lower down, just below the top, and we're still short on WTI. I've still got another tranche from lower down, so we're still not in the money completely just yet, but this is moving down very pleasingly. If we look at this on the 4-hour chart, you can see we've got this beautiful topping formation. We're trying to get down below the 20-period moving average. I don't trade this off 4-hour charts. I like to look at the daily charts. We need to get back down to Moab. A break below Moab should see the resumption of this trend, a retest of this double bottom low at the channel bottom, and then eventually a breakdown below the channel, below 50, and maybe even into the 40s for WTI oil. Brent crude doing a similar thing. Let's have a look at Brent crude very quickly. Also a channel line, not quite as neat, but a trend line nevertheless, a little bit of a probe through there into that order block, but a pretty similar picture, just touching that trend line and moving down. There's the double bottom on Brent crude, and eventually a breakdown below that low will be seen as the next continuation of the move down. Right, on this page, I have nothing on VIX, nothing on the US10Y. We're long on TLT. That's moving down again in pre-market. So that's going to be just interminably boring and irritating. But the other one that we got on here is the dollar South African rand. I've just drawn in this little fractal. There's no real reason for the rand to be strong. In other words, when this chart moves down, it indicates rand strength against the US dollar. There's no reason for this constant driving, continuous move down. In other words, strength in the rand. The last time that happened, we got a big short squeeze right back up to the top of the range, and I'm expecting, we're following a very similar price structure and pattern right now, and I expect we'll see another short squeeze. That could take us right back up to 19.5 and then probably up to 20 as well. And then finally on the softs and the grains, we're still long on sugar, short on cocoa, short on coffee, long on corn, long on cotton, nothing on orange juice, long on wheat, and nothing on soya. All of this is looking okay. Sugar is probing down a bit, and I keep on getting questions in my private group about what's going on here. We did take a long tranche near the bottom of this channel, and I think we're going to try and squeeze up. This is a falling wedge pattern. It's a pretty bullish pattern, and we're very, very oversold. And in the longer, bigger term picture, let's go to the weekly chart. You can see that we're right at Sugar Moab, just below it actually, but there is some support just in that region there, which we pointed out some time ago, and that's where we're bouncing off right there at that low at 16.5, and the last time we got there was in June 2021. We're right back there now, and let's see if we can get a bounce. And that's all on the softs and the grains for now, folks, and I think that's covered everything. All eyes will be on energies, of course, with the Middle East situation going on. And we seem to be a little bit contrarian. I'm not short on natural gas anymore, and I think this is angling long for the immediate future in any case, but we are short on WTI oil, and that appears to be a contrarian play. But we've done this multiple times over the last 3 or 4 years, and every time we've been right on WTI oil, and it's sold off from the highs. Have a great trading day, folks. It's an exciting and interesting, potentially very sad and upsetting week in terms of what's going on. Hopefully all of these wars will be brought to an end at some point in the near future, and we can experience some relative peace. Have a great trading day. I'll speak to you soon.
They call me the hedgehog. rolling in the zone, layered like an onion with protection on the throne. I ain't reckless, I'm precise like a sniper with a plan. Every loss gets a hedge, I'm the risk-adjusted man. Got positions like chess, never checkmate fast. While they YOLO into doom, I'm built to outlast. I dance with the market, don't fight, just glide. And I hedge like a boss with my stop-loss pride. Hedgehog, hustle, smooth like jazz. Covered on the downside, still got pizzazz. Market go wild, I ain't scared.